What's up, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is October 1st, brand new month, brand new quarter. Let's go. And we finally had a nice day in the market, team. So we're going to talk about price action in the markets today, some of the trades I took. Before we go into all that, quick disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's get into the video, team. Alrighty, boom, box scores for today. Let's dive in. Oh my gosh, it's Friday. I hope everyone's got some good plans for this weekend. Indices, box scores, S&P 500 as measured by the SPY was up 1.19%. NASDAQ QQQ was up 0.62%. IWM small caps, which I am overweight, were up 1.61%. And the Dow Jones was up 1.45%. They are known as the dogs of the Dow, but today they were not dogs. Today they were outperformers. So let's take a look under the hood. But yeah, check this out. So percent advancers, we had some nice breadth across the board. In the small caps, we had 80% advancers, Dow Jones 87% advancers, a little bit weaker breadth than the SPY and the QQQ, coming in at 79% breadth and 65% breadth. But if you've been watching these videos, there's many reasons why these Qs are behaving a little bit weaker than the rest of the indices. And that's primarily because everyone had been rotating into the Qs for months and months and months. And now it is time for that rotation to end. Okay, so from the current slide, boom, Finviz Heat Map. You can see that, yeah, we got a really nice bounce back. And in yesterday's video, that's why I love doing a daily video, because you can sort of like stitch together the timeline of everything that's happening. So, I mentioned that we had this huge negative net dealer gamma position. And hey, tomorrow could be, we could see some fireworks. It could be a really big day. And we did get those fireworks today to the upside. Microsoft is up 2.5%. Disney up 4%. One of our members took a really nice trade in Disney today. Google was up 2.15%. And yeah, shout out to AJ in our group. AJ's been killing it. He's been developing some really nice tools and just, really good addition to the group. Apple up 0.81%. And just some strength across the board. You can see these financials, which I am overweight. We're up on the day, a lot of strength across the board. And then the areas that were weak were these defensive areas of the market that everyone has been climbing into for the past several months. So to me, even though we've been in this downtrend, the fact that everyone is moving out of defensive assets into more aggressive small caps, cyclicals, high beta, does that mean we're about to crash? Like everyone's saying we're about to crash, but then, I get my alerts on my phone and it'll be like, oh, XYZ asset, made a 3-period new high. And it'll be like, some company that's like a cyclicals name. Do cyclicals start rallying when the market's going to crash? Not in my experience. So we'll have to see what happens. But take a look at this S&P 500. Again, coming into today's session, there was a lot of ambiguity on the plate, team. So let's go back to last night. So for the past couple weeks, and this has been a month-long downtrend, team, a month of net selling in the market. Basically, we're having these horrible trading sessions where it'd be like, blah, everyone just pukes up everything they own into the close. Then we would get this big gap up overnight. And I would see like, oh my gosh, Russell's up over 1%. Yeah, look, this is my alert for all the new symbols that are making 3-period new highs. But yeah, I would see like, oh, okay, all these asset groups are up, this is great. And then overnight, those gains would slowly begin to be chipped away. Sellers would come in, start selling them. Then the morning would roll around and all the gains would pretty much be gone by the open. And then all of a sudden on the open, it's like, then they turn red and then we just have a horrible day. Yesterday was the opposite. Yesterday, after this big flush out, in the overnight market, there was some carnage. There was some spillover. I believe these markets were down almost 1%. And when I saw that, I was like, thank goodness. This is way better. I actually prefer that because it's much better to open up, in a really like, oh my gosh, the market's being devastated. And then you climb out of that hole rather than the other way around. There's this adage that when you're in a bull market, you open up on the lows You close on the highs. When you're in a bear market, you open up on the highs and you close on the lows. So today we did just that. We opened up on the lows, we closed on the highs, team. So overall a good session, but yeah, there was a lot of back and forth. So this S&P 500, let's check it out. You can see the way we closed inside of this new monthly value area. So that's, check mark. But we closed right at this upward trend channel, and we closed right below the 5-day exponential moving average. So there is some ambiguity in that we were not even able to reclaim the 5-period EMA, which is, the shortest term moving average that I track. So it's not all, flowers, roses, marshmallows, all that good stuff. There's still some ambiguity on the table, but it's good to know that, all we really need is one more day of strong price action and we can kiss this downward trend channel goodbye. So let's take a look. We'll go into our hourly. Let's actually take a look. Yeah, hourly's good. Let's check this out. So we were slipping overnight, horrible stuff. We hit this low of 42.60 on the S&P 500. And today, we climbed very nicely. We had some panicking on the open. Like, look at this hourly candle. We slipped back into the abyss. So when this happened, everybody in our community was getting ready. We're all doing our analysis in the morning. And we're like, okay, we see some good things. Crypto's looking good. We see treasuries are looking good. Today might be a good day. And the market started really slipping. So, yeah, that was like, are we about to just crash right now? That's sort of how it felt. And I was like, let me just get up from the desk for a minute, stretch my legs, whatever. By the time I got back on the desk after my little break, we were already starting to climb back towards green. And you can see here, right around 11 o'clock, that's where we made the turn. And once we made that turn, we didn't look back. And I pretty much understood that, if we didn't slip into the abyss here and now we're making the turn after such a horrible day yesterday, we're probably going to see that short covering upside. And we did see that. So we actually snuck into this weekly value area. And what's very interesting is that, we're just trading below value. Once next week opens, we're going to be trading inside of value. So it's unless we really start to slip further and further down into the abyss, at some point, from September 20th on, it's not like we're, oh my gosh, we've continued to go lower and lower and lower. It's really just we got to bounce. Then we made basically an equivalent low. So you could even call this a double bottom. And then we got to bounce today. So this could very easily go down as, oh yeah, we had this double bottom. The first leg down got everyone. The second leg down devastated everyone. So we'll have to see. Yeah, I'm pretty optimistic going into next week. Let's take a look. We have S&P 500. We're gonna go through these really quickly. NASDAQ, also put in a hammer candle at 0.65%. This is my least favorite of the indices right now, so I'm not gonna spend too much time on it. The Russell 2000 team, boom! The Russell, oh my gosh, and it closed strong. The future is up 1.75%. So the IWM, I'm heavily in this thing, team. So my thing is I'm just fully transparent. In all these videos, I'm telling you actually how I'm positioned. And it's not just I think this is going to happen. Let me make this big market call. But I have no money in it or whatever. For me, it's always, this is how I'm actually running my own trading business. So yeah, IWM, I'm very invested in this. I have a large position in it. And these small caps are now making the turn, team. So we talked about these yesterday. We keep making these higher lows. And again, another higher low, team. We washed out below this monthly value area low at 2198.3. And boom, we traded above our monthly point of control on day one of the month. I love that. And now in one fell swoop, we took out all of the key moving averages. The 5-day EMA, the 20-day SMA, 50-day SMA, 200-day SMA, they're all gone. All in the rear view mirror. We didn't close directly on the highs, but that's okay to me. These small caps, still nice closing range. So we'll have to see what happens next week. But we have this Venom R1 pivot up here at 2363.8. I think into the year end, the small caps are going to have a nice sequence. We'll have to see though. I could be wrong on that. I don't think I am, given the data that I have in hand today. Dogs of the Dow up 1.51%. Same deal, you know, a potential double bottom setup, and they almost tagged that 200-day moving average, and now we're trading inside of value. All right, so let's move on from these indices. Let's actually take a look. I think I'm going to add also a little segment in this slide deck where we go through cryptocurrency real quick. Let's actually talk about it. I'm not sure which order I'm going to put it in. You know, feel free to leave a comment on the video, you know, if you would like me to include, you know, similar to how I go through this heat map or like the sectors, if you'd like me to include just a quick 30 seconds on cryptocurrencies, I can definitely do that. Let's take a look for today. Okay, so Finviz, crypto, boom. Oh my gosh, team, it's even bigger. So yeah, Bitcoin, you know, I've been talking about this, tweeting about it, whatever. I think everyone knows my rationale here, but in a nutshell, September is the weakest seasonal month for crypto. It's been a very weak month. We had these long lower wicks on these candles. That means people were accumulating this, and we got this huge face ripper of a rally, team, up 10.57%. Boom! And this is why, like, I think if you're an active trader of these cryptocurrencies, you know, you have to be like, your trade location really has to be spot on because you can get caught off guard. But I think with these cryptos, it's like they're just so much better just buy and hold them, really. Like, basically the people that make the most money in crypto are the people that hold crypto the longest. So with something like crypto, where I really think this is like a generational asset and a generational opportunity, do I really want to be like day trading it and like, oh, I'm in and out, in and out? Not really. So like I just try to hold on as long as I can. So Ethereum also looking really good, up 10.68%. And let me ask you this, team. If the market was going to crash, would cryptos be up 10% in a single day? And would the cyclicals be rallying? No. So I'm not in that camp that the market's crashing. So we'll have to see. But yeah, really nice performance for cryptocurrency sectors. Yeah, take a look at this sector map. Top slots here: energy, regional banks, aerospace and defense. Aerospace and defense is a new one. Let's actually take a look at that. And I'm actually so pumped. There's so many variables that come out, you know, after the market closes on Friday, or even they're only available on Saturday. And yeah, I do a weekend market analysis for everyone in the Pristine Capital trading community. I'm actually like so pumped to do that for this week, so I'm probably going to start that tomorrow. ITA, yeah, this aerospace and defense ETF, up 1.88%. Yeah, this one looks like it could be making the turn. Let me see, and let me take a look at Raytheon. Yeah, Raytheon looks pretty good. Raytheon might be breaking out soon. Okay, that's awesome. All right, so that's the aerospace and defense. It's kind of on a tangent. Let me see. Back. Okay, there we are. Probably edit that out. Okay, style factors. Well, we have our sectors. Okay, so sectors. Let's see what else was strong. Let's see which was strongest. Transports. Transports were up 2.17%, team. Why would the transports be leading the market if we were crashing? Why? Somebody tell me why. Let's see. It's not like they're breaking out or anything though, so that still could be plausible. Yeah, if these were like breaking out, then I'd be like, no way. But yeah, nice bounce though, showing some relative strength. So this is like the pre-breakout where like most traders aren't paying attention. It's just like, okay, a couple days where it's showing relative strength, not going to think anything of it. But then if and when this does break out, which I think is plausible, then it'll get overextended from all these key moving averages, and then everyone will be like, oh my gosh, now I want to trade it. And nobody wants to trade it while it's still consolidating. And let's take a look also at the Jets ETF. Yeah, look at this. The Jets ETF is leading. It was up 5.33% today. And look at the volume on it. So yeah, players are allocating into these areas of the market. They're not taking all their chips off. But it probably seems that way to most people because the stocks they've been trading for so long are really weak. But even these names, you know, are pretty strong today. Google, Microsoft. Yeah, so even these are showing like a sign of life, a bounce. Like for instance, Microsoft, you know, it's had 3 ugly candles in a row, and in one fell swoop, basically engulfed those 3 ugly candles. So yeah, but the weakness is really in the stocks that everyone owns. That's why they're weak, because everyone owns them. Now they have to sell them. See, we have transports. What else was strong? Yeah, transport's really sticking out. Then everything was pretty strong overall. And then the regional banks team up 2.39%, and energy. Regional banks, come on. Look at that. That's not saying market crash. The regional banks haven't even missed a beat. So like, yeah, this looks really good. I think I might have to add this to the long-term portfolio. I'm currently long the financials XLF, but it seems like the regional banks are almost like a more high beta way of playing that theme. But yeah, financials look great also. You know, very close to a breakout. This is where they're so close to a breakout, but most people still don't realize it because they're not paying attention. So it's like, think about it. If financials go up another like 2% or another 1%, then it'll be like, oh my gosh, like it's literally trading at a new high pretty much. But for right now, they're still under the radar. But look, they're above all the key moving averages, above the 20-day, 50-day, 5-day EMA. So the proof is right there, team. Style factors. Style factors, cyclicals up 1.82%. High beta up 2.23%. Why would high beta be doing so well if we were crashing? Doesn't make sense. Wouldn't everybody want to be in the lowest beta assets? So, yeah. And then the worst performer on the day was Minvol. Minvol's what everyone would want to be in if we were going down the tubes. But the thing is, and this is what nobody understands, or, you know, people understand, there's actually like a lot of, you know, good price action traders out there. So I don't want to throw everyone in the same bucket. But so what a lot of people don't understand, that maybe they aren't price action traders, maybe they don't look at this data every day, is over the past 6 months, the market has been going down. And people don't realize that because there's been a couple of names that have been going up, and when they go up, they pull the market with them. So we've been in a market decline for, you know, 6 to 8 months. Like, you know, I'm going to point this out again. The small caps, let's look at the weekly chart. IWM. So look at this team. You know, we haven't been in a bull market. Most of the stocks in this market have not been in a bull market. So a lot of people are getting it confused, where it's like the market is going to start going down now, but it's like the market's been, you know, not really even strong for the past year. So what's happening now is like those stocks everyone was in are starting to go down, while the stocks that everyone was not in are starting to get rotated into. Like the IWM, look at this weekly candle. That's not really even that bad. It's like almost a doji. Not quite a doji, but you know, you can see it's really not a bad candle. All right, so those are our style factors. Let's talk about some of my trades for today. We're going to go through these real quick. I don't want to go into too much detail. So yeah, I got long these IWM October 15th 218 strike calls for $5.67. And these stars, like, I wanted to figure out a way to indicate my position sizing without telling members how they should be sizing, because I really think everyone should develop their own position sizing methodology, because everyone has a different psychological makeup and a different risk tolerance. My risk tolerance personally is very, very high, but I'm unique in that way. So, you know, everyone is totally different. So like for someone, you know, putting a 1% position on might be a lot. For somebody else, a 0.5%. For somebody, you know, 5% might be a lot. So this star system is me indicating, you know, I have either 1 star, 2 star, 3 star. the size of the position. So these are some short-term calls. These are the October 15th 218 strike calls. Got these for 567. This was at 1124. And boom, basically this was when I saw that the market was making the turn. And once I saw the small caps go from really, really red to positive, I knew. I was like, these bears are cooked. Because I've been looking at the put to call ratio for days and days and days and talking to you guys about it in these videos. I was like, these guys are cooked. So yeah, I entered those calls. And this was at like 1124. So I entered these. Yes, this is when we slipped into the abyss. So I kind of waited for this thing to look a little bit better. We jumped into the daily value area and I was like, oh, okay. And then right around here, so this was when we took out the daily point of control. And I was like, all right, game on. I'm right in here. So I entered these and then the small caps really just went on a run throughout the rest of the session. So yeah, that one worked out pretty well. So that one looked good. And then I just did some reshuffling of the deck for my options. So I closed out 10% of my GBTC common shares for a nice winner, 37.05. I paid 35.27. I have a really overweight position in that GBTC, and I also have one in the Ethereum Trust as well. So I just shaved a little bit off. And I actually used the proceeds of that to buy those IWM calls I just talked about. And then I closed out my Tesla common shares for maybe like a 1% winner, nothing big. And I just said there are other names I'd rather allocate this capital to, given the circumstances we're in, where a lot of these cyclical names are really beginning to outperform. I was like, why would I be in Tesla? It's in the NASDAQ. It might get dragged down with those names. I don't want to use up my capital when I could have it in something else. I ended up getting long SBLK. Look at SBLK, team. This thing looks like a juggernaut. SBLK. Oh wait, this is the 5-minute chart. I'm going to go to the daily. Yeah, so SBLK, look at this one. It's a shipping company and it's in a nice trend. You know, it's making higher highs. And look at this. We just made a nice higher low, pulled back to the 50. And now we're breaking out of this monthly value area. So this one just looks great. And again, you know, why are stocks doing this if we're in a market crash? You know, why are they making new highs? It's because the stocks, these are the stocks that most people don't really traffic in that much. You know, I don't really traffic in these names a lot either, but it's always fun whenever they catch momentum, because it's just fun to like play around with different tickers, different themes, different tickers, all that stuff. Kind of have to like jump out of your comfort zone a little bit. And then I bought some Solana as well in my Coinbase account. So Solana is one that I really wanted to get exposure to for a while. I'm a huge Bitcoin guy and an even bigger Ethereum guy. Solana, it's not a core position for me, I'll tell you that. This one's much more speculative. Like Ethereum and Bitcoin, I'm like, these are going to be around, you know, forever. I feel so comfortable with these. Solana is definitely more of a speculation, but it's been a really nice runner this year. And the chart, you know, it's turning really nicely. So entered a small position in this one just to really accent my crypto portfolio as these cryptos start to build more momentum as we're coming out of September, which is the weakest seasonal month for crypto. All right, so those are my trades for today. Let's real quick. This video is already very long. I got to figure out a way to condense these videos too. Sometimes I just, you know, get on a tangent or whatever. But yeah, let's take a look at our VicTech options races. This video is sponsored by VicTech. No, I'm kidding. It's really not. I do have like an affiliate agreement with them. It's like I include my affiliate agreement in the descriptions to the video every day. I really like these guys. They're freaking awesome. SPY, Tesla, Amazon. These are pretty much, you know, the usual suspects. I will say Cisco doesn't usually pop up on here. Let's take a look at Cisco. Now, eventually I'll get a channel sponsor, but not right now. Right now I don't have enough traffic. Let's see. Cisco, CSCO. Yeah, this one doesn't really look Doesn't really look all that great to me. Now, real quick, let's take a look at our matrix mode. Let's take a look at our Tradescape. So Tradescape, you have that Cisco, SPXW. Look, everyone was buying puts, team. They all bought puts into the strength. Everyone's getting ready for that crash, team. And everyone bought SPY puts too. Let's go. So that's exactly what I want to see, team. I want them to buy puts into the strength. And let me tell you, this is what happens every time we pull back. So when we pull back, in the beginning, nobody believes we're in a pullback. Nobody thinks the market can go down. So as the market's weak, they're buying calls into the weakness. They're trying to buy the dip. They're going, oh my gosh, like, let me just buy the dip. I'm going to make more money because now the price went lower and I know it's going to bounce right back. And then people start to get run over, and they still keep trying. They still keep trying, still keep trying. And then they get devastated where, you know, they get sparked on like one of these movements. And then, you know, the market starts coming back. They're almost at break even. Boom, we take the next leg lower. They're even more devastated. So then once you start to get some real market strength, then they don't believe that the market can go up. They become fully entrenched in these narratives that start growing as the sell-off continues. Like, we've been in a downtrend for a month. Now we have all these narratives. What are the narratives? Oh, the market can't go up because the Fed's tapering. The market can't go up because of the debt ceiling. The market can't go up because the politicians won't get a deal on infrastructure. Oh, the market can't go up because of the Chinese Evergrande situation. They're going to go belly up and they're going to implode the financial system. The market can't go up because yields are going higher. You know, the narratives are endless, endless, endless. So then you start to get these beautiful situations like this, where the market rips higher and everyone's buying puts. Let's take a look at some things everyone was buying calls in. So let's see Alibaba. This one was ugly today. I'm so glad I hit out of this. Okay, yeah, this is a mixture of calls and puts. Let's take a look at the Qs. Yeah, everyone bought puts on the Qs. I love this. Let's take a look at this SPXB. Yeah, so this is a healthy mixture. Maybe even some more calls than puts, but basically right down the middle. So yeah, I think you get a good feel for the color of the options market. That's really what I'm trying to do. Just give you some color on, you know, where the money's flowing in the market. That being said, team, that about does it for this video. Hope y'all had a good trading day, a good Friday. That was such a good way to end the week, you know, rather than the market just falling off a cliff. If you're interested in getting my weekend market analysis video that I'm going to be putting out and my weekend watch list video, you know, feel free to go to pristinecapital.net, sign up to join our community. We would love to have you. And we're building an awesome group. And our group is like, you know, we're all trying to get better. We're all trying to improve our game. So there's no like egos, nobody like going crazy and being stupid. There was one person that was already kind of doing that, and I had to like give him a stern talking to, and he ended up quitting the group. But other than that, everybody's cool. So with that being said, that about does it for this market recap video. I'll see you guys all next week.